This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Terror in Paris. Multiple attacks leave more than 36 dead in the French capital. We'll have a report and discuss these new destabilizing events. Equities have their worst week since the summer, and oil falls toward $40 a barrel. We'll look at the week just passed and look ahead in light of tonight's developments. And search for a treatment, the fate of 2 drugs, and one mother's hope for her 2 sons. All that and more tonight on Nightly Business Report for Friday, November 13th. Good evening, everyone. Paris is a city under siege tonight. Multiple attacks involving gunfire and explosions across the French capital have left more than 36 dead. The situation is still developing and is extremely fluid. The attacks took place at a Paris restaurant outside the Stade de France soccer stadium, where a France-Germany soccer match was taking place, and at a theater. There are reports of an ongoing hostage situation at that location. This is the second time this year that Paris has been hit by terror, and tonight's events mark a new dangerous chapter in the war against terror. It is a chapter with major destabilizing potential for economies and markets, and those markets are already reacting around the globe. Joining us now to discuss tonight's attacks in Paris is John Canali. He's an investment strategist and economist for LPL Financial. John, welcome. Good to have you with us.
Good to be here.
There's more that we don't know than we do know at this hour, and these events are developing. But the one thing we can certainly say is that this is a new and dangerous turn in the war on terror, one that can really influence economies and markets, not just next week, for months and years.
Yeah, we've had a difficult week already in financial markets, but of course the scale of this type of event goes far beyond just financial markets. And what markets want to see is certainty, and certainly this kind of event really introduces a lot of uncertainty. And markets are going to be asking, is this just the first of many of these attacks, or are they going to spread to other cities? And of course, markets don't like that uncertainty. So I think for now, it's a wait and see. But if we go through the next days and weeks and months and there's more of these and they're larger, that can really have a big impact on both markets and economies.
This is a lesson yet again, and a lesson we have learned at the attacks at Charlie Hebdo earlier this year in Boston and elsewhere. This is a lesson that risk takes many, many different forms. Obviously, there are the more prosaic forms, an earnings miss or whatever, an economic number that can cause the market to go down. But these kinds of things, which we live with every day, can take markets in violent turns very quickly. Can't they, John?
They definitely can. And history will show you that there can be extremely sharp and swift downward movements in equity markets and all risk assets when these type of events occur. But history also will show you, as long as the events are not widespread and impact economic data or economic activity over a wide area over a long period of time, markets can and do recover. So right now, we just don't know enough to say whether or not this is just isolated to Paris, or it's European-wide, or it's global. Once markets can wrap their heads around that, then I think we can understand if this is just a 1 or 2 day event or it's more of a 3 or 4 week event.
One certainly remembers Boston and the response to that, the bombing a couple of years ago. Earlier this year, the Charlie Hebdo attacks that left, I believe it was 17 dead in Paris. And markets certainly have to digest this kind of information. Take us through some of the history of how markets react when something like this happens. It generally means that people move away from riskier assets and into more secure assets. Isn't that true, John?
That's true over the very short term. If this were to have happened during the trading day, what you would have seen was a swift move away from risk assets like equities, and within equities to safer havens like utilities and telecom, and then certainly overall a move from stocks into bonds. So that's typically what you see during these type of events. As events unfold and more news comes in suggesting that the attack is a more localized thing, that can reverse. But in this case, that might take a couple of days or weeks or months for that to unfold. So typically that's the pattern, but we just don't know enough sitting here on Friday night to understand what's going to happen on Monday morning.
That's exactly the point on which to close it. There is much more that we don't know than we do at this hour. John Canali with LPL Financial, thank you very much.
Thank you.
Well, as John mentioned, stocks did close out a very rough week, and they ended it on the downside. That, of course, before tonight's tragic events in Paris. Concerns over the economy, the health of the consumer, and a slide in oil prices pressured equities, just as the Federal Reserve sets the table for a possible interest rate raise next month. The Dow Jones Industrial Average fell 202 points to 17,245. NASDAQ off 77, and the S&P 500 was down 22. For the week, all of the major indexes fell more than 3%, as you see right there, with the NASDAQ off more than 4.25%. The blue chip Dow lost more than 660 points in the past 5 trading sessions. Well, oil, that's another one to watch. It is melting down again. Domestic crude settled near $40 a barrel, falling more than 8% this week, its biggest weekly loss in 8 months. Jackie DeAngelis tells us why oil is sliding, why it's impacting the market, and what it could mean for your budget.
The International Energy Agency today declared a world oil glut. A record 3 billion barrels in storage, and demand for all that crude will tick down this year. Earlier this week, the agency said we won't see $80 oil till 2020. OPEC adding to the chatter, saying its outlook is essentially unchanged. We're only 3 weeks away from the next big meeting in Vienna. Further pressure coming from a stronger dollar, supported by the possibility of a Fed rate hike in December and a weak euro. It's the perfect storm to send prices under $40 quickly.
The technicals, after an early November spike, have really just kind of plummeted. IEA came out today saying their inventories that they look at were close to 3 billion barrels. And here in the U.S., when we include the SPR, they jump back over 2 billion barrels this week. So there's just there's a lot of supply out there.
While lower crude prices take a toll on the equity markets because the big producers are weighted heavily on the averages, it's actually very good for consumers. The national average for a gallon of regular gas, $2.19, down 25% from this time last year, according to AAA. And $2 is still in sight by the end of the year. Low crude prices also take heating oil prices down 40% since this time last year. But traders caution there is some support in the market, in the high 30s, and there are always unforeseen events that could turn this trend around.
You're looking at the 37.75 low at the end of August on that one meltdown day when just everything was coming unglued. That's certainly your next technical stop and the next point that I think a lot of people would be looking at from a chart perspective.
So absent any catalyst, crude oil prices will have a rough time rebounding, as some thought they would this year. For Nightly Business Report, I'm Jackie DeAngelis.
All right, let's turn now to John Kilduff to talk more about the oil markets. He's the founding partner of Again Capital and a good friend of Nightly Business Report. John, always good to see you.
My pleasure.
I wish it took place on a night unlike tonight, where there are still ongoing developments over in Paris. When events like this one, multiple attacks in Paris, multiple locations with at least 36 dead now, how do these kinds of events play out in the oil markets in the ensuing days and weeks, historically?
Well, you have to look at it. It depends on the region where the trouble is, Tyler. So in this one, it should be a depressing factor for oil prices because the response by the governments around the world will likely be one where security is greatly increased, where people may hunker down. So economic activity, arguably, in the West would slow for a time as people sort out, is there more danger ahead? Do I need to sort of shelter in place to a degree and not go out, not spend money,
so the
not go about our
economic
lives?
chilling effect
Yes,
that often accompanies these kinds of events.
Right.
People go to their home and they don't go out as much. Maybe they don't spend as much. Lower economic
they don't drive as much. They don't travel.
They don't
as much.
travel as much.
Right.
All other things being equal, that would slow the demand for oil.
That's correct, and that's because Western targets are being hit. Now, the counter to that, or what ensues later, though, Tyler, is what is the response going to be in the region? If this does end up being linked to either al-Qaeda in the Arabian Peninsula, like we've seen before, or it is an ISIS-linked attack, if the response is to go into the region in a much heavier way, into Iraq, into Turkey, if oil assets are going to come into play, into harm's way, then obviously that would be a security premium, inflation factor for oil prices, and they would go on the rip higher.
Is there a strategic asset? You follow a lot of asset categories. Is there a strategic asset that is more prone to being affected by terror or geopolitical risk than oil?
No, I would say absolutely not. Obviously, the international equity markets will have to sort this out for the factors we just talked about. But oil can come into the crosshairs. And I've been worried about, not worried, but I guess worried that the bombing of the Russian airplane will get linked to ISIS and that their response will be very robust again in the region. And you have, again, potentially the kind of war situations we get in response to these things, and that oil becomes in the crosshairs as ISIS gets more and more desperate.
Let's talk very quickly about what happened this week in the oil markets. It was a major sell-off, a slide, 8%. I'm not saying it came out of nowhere, but it certainly came. Why? A four-letter word, glut. Finally, the realization hit this market that there's over 2 billion barrels of all kinds of petroleum products in the United States and another billion around the world. We've never had this much oil and products, gasoline, in storage before. And it's more coming at us every day. There's no end to the overproduction. This market is out of balance, and it is not coming close to being back in balance. Supply and demand. The demand is still there, reasonably speaking, but the supply has outstripped it.
It's just overwhelming, Tyler.
John, thank you very much. John Kilduff with Again Capital. Well, the decline in oil is one of the reasons why price increases across the economy have been so muted lately. The Producer Price Index, which measures the prices companies receive for goods and services at the wholesale level, fell 0.4% in October. That's the second straight month of declines. Excluding food and energy, so-called core prices also fell. Well, consumers spent less than expected in October. Retail sales rose 0.1% last month, and that follows slow spending over the summer and raises concerns about the upcoming holiday shopping season. Consumer spending accounts for more than 2/3 of economic output, but as Bob Pisani tells us, money is being spent, just not necessarily at the usual places.
New 52-week lows everywhere in retailers today, but don't miss the key story. Consumers are buying. They're just not buying at department stores and some apparel places. You could see this in the October retail sales report. Online sales up over 7%. Auto dealers up almost 7% as well. Furniture sales up 5%. And people were drinking and eating out more. Those sales were up over 5%. And sales at home improvement centers were up over 4%. And department store sales, just a measly 0.5%. See, they're not shopping at department stores. And by the way, some customers are buying apparel. Younger consumers are flocking to fast fashion stores like H&M, Forever 21, Zara, and Uniqlo, but none of them are publicly traded in the United States. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And today, JCPenney disappointed investors despite reporting sales growth that beat expectations. Shares fell sharply for Penny's, but that was nothing compared with some other retailers, several of whom expressed doubts about the holiday shopping season in recent days. Take Nordstrom. Its shares cratered nearly 15% today after it cut its profit and sales forecast, something we told you about last night. Still ahead, how to invest in this uncertain market. Our market monitor has some ideas. Shares of Volkswagen brand cars fell more than 5% in October. That's the first full month following revelations the automaker cheated on emissions tests. The automaker's head of sales said the company is not only feeling the impact of the scandal, but also weakness in some markets. Sales in Russia fell 26% and dropped 50% in Brazil. Well, the fight over fantasy sports is escalating. FanDuel and DraftKings, the two largest companies in this fast-growing industry, are filing lawsuits of their own in an effort to keep their operations running in the state of New York. Eric Chemi reports from New York, where fantasy sports supporters staged a rally today.
Fantasy sports are fighting back in real-life courts. Today, daily fantasy leaders FanDuel and DraftKings filed separate lawsuits against New York Attorney General Eric Schneiderman. hoping to keep their games running in the state despite the office's cease and desist order. Meanwhile, FanDuel organized a rally in front of Schneiderman's office to make sure their voices were heard.
I just don't think this should be a priority of Schneiderman when there's so many other issues in the city and the state.
They're fighting over a central question of whether this game is gambling. FanDuel claims it's a game of skill.
Hundreds of thousands of people love to play every week. It's a harmless pastime that people love, as you can see from the hundreds of people out here. So we don't want it to be shut down. We're going to champion our cause.
But regulators like Schneiderman are focused on the fact that this is sports betting, skill or not, and gambling law in the state must be respected.
Our state constitution is pretty clear. It talks about bookmaking and lotteries and says all other forms of gambling are prohibited unless you have a specific exemption. And there simply is no exemption for daily online sports gambling.
Both might be right. It can be a game of skill and be gambling, and that question may not matter until the courts decide. In the meantime, FanDuel and DraftKings will keep accepting bets from New Yorkers, forcing the courts to act. One thing to watch for, some payment processors have already announced they will not accept New York payments during this murky legal situation. If others like PayPal bail too, that might mean more damage than any court action. For Nightly Business Report, I'm Eric Chemi in New York.
And late today, FanDuel said it will start the process of limiting access to users in New York State. Comcast Ventures and NBC Sports Ventures have stakes in FanDuel. Comcast is the parent of CNBC, which produces this program. Well, a strong dollar overshadows Tyco's profit report, and that is where we begin tonight's market focus. The company saw its revenue fall because of that negative foreign currency impact. The maker of fire protection and security systems says it still sees pockets of strength globally. Shares slipped more than 3% to $35.31. Perrigo shareholders rejected Mylan's hostile $26 billion takeover bid. The failed deal ends a months-long back and forth between those generic drug makers. Mylan up 13% today to $48.78. Perrigo off 6% to $146.90. Springleaf Holdings, a personal and auto loan company, says it has reached a settlement with the Department of Justice that will let it go ahead with an acquisition of One Main Financial. The Justice Department says Springleaf will have to divest more than 120 branches so that it can proceed with the purchase. Shares there up more than 11% on this otherwise down day. They finished at $49.23. Staples and Office Depot are offering to transfer $600 million in corporate contracts to a wholesaler. This is according to Dow Jones. The move is an effort by the firms to persuade the Federal Trade Commission to grant the two companies antitrust approval so they can merge. Shares of Office Depot rose a fraction to $7.52. Staples down more than 1% to $12.61. So what should investors know when it comes to today's uncertain marketplace? Our Market Monitor guest has some ideas. Erin Gibbs joins us. She's Equity Chief Investment Officer at S&P Capital IQ. Erin, nice to have you here in person.
Thank you.
I don't know that we've ever sat in person. I've met you over the television, but not here. Let's begin tonight with the unfolding developments in Paris.
Yes.
What we know is much smaller than what we don't know about the origin, who will claim responsibility for this, indeed the death toll. We do know that more than 36 have perished so far. How does this change your investing thesis, if it does, over the next 6 months?
Well, as you said, it's very early, but right now, typically these types of very scary types of threats often don't have that much of a long-term impact on the stock market and our investing. It does seem to be very focused, so I don't see any really immediate impact. We can certainly see more volatility in the markets over the next coming weeks just because the fear gauge is a little higher. People might be a little quicker to move out. But from an economic standpoint, it really doesn't have a big impact overall.
John Kilduff, who was just here in our prior segment, said that he sees it a different way. He thinks that in the wake of events like this, people tend to do less. They stay home more. They travel less. They may feel a little more protective of their assets and take a more defensive posture. Do you see it that way? I guess not.
It tends to flush out very quickly. We tend to have, for me at least, we tend to have fairly short-term memories, particularly when it's something that's so far off as in Paris versus if it was much more localized within the U.S. Like I said, you could see more volatility and you could see people scaling back, but particularly if this tends to be one isolated incident, we don't see more incidents going forward. It just all happens tonight. I could certainly see this being flushed out within a couple of weeks. And you see that with wars, too, and that it tends to just take a few weeks and people tend to go back to their normal patterns.
Let's take a look at quickly 3 of the stocks that you like right now. These are very consumer-facing companies, leading with Apple, which has had a rough week.
It has, and though I recommend it as a really good value, high-quality stock. Right now, we're expecting about 7% earnings growth over the next year. So if the price just stays on track of where its earnings growth is, you could see that 7% appreciation, on top of the fact that it's actually trading at a pretty big discount to where we've been seeing it over the past 3 years. So between the discount and good, decent earnings growth, I could see this stock easily going up another 10 to 15%.
Quick thought on Walt Disney. Who doesn't like Disney?
Who doesn't like Disney? Disney is one of these great growth stories. One, again, another high quality, long-term type of holding. But one of the things that we're really seeing potential growth for is they've acquired Star Wars as well as Marvel's Avengers. And it's not just the revenues from those films per se, but the products relating to the films, the toys, the clothes. We saw a huge amount, the merchandise, and so we saw just an enormous amount of revenue attached to their Frozen franchise, and we see the potential, particularly with the Star Wars going forward.
All right, Erin, we have to leave it there on this very busy night. I should point out that your third pick is Foot Locker, and you say it's not just men's athletic shoes anymore. Erin
That's
Gibbs,
right.
Erin Gibbs, thank you very much.
Thank
Appreciate
you
you being with us this evening. Coming up, a critical few weeks lie ahead for possible treatment of a devastating disease. One family's inspiring story when we come back. In the next couple of weeks, 2 drugs that combat a rare and fatal form of muscular dystrophy will come before the Food and Drug Administration for review. Meg Terrell reports on what could be a watershed moment for patients, families, and the biotech industry.
It's been 13 years since Jen McNary's oldest son, Austin, was diagnosed with a fatal disease that had no cure.
It was a pretty hopeless feeling. You know, I remember thinking that if one of the first questions was, do they need some sort of infusion? Do they need some sort of transfusion? Do they need some chemotherapy? Like, trying to think of pediatric diseases, what do we do? And I was really jealous of all the families at Dartmouth-Hitchcock that were receiving chemotherapy that day. We had to walk by the chemo clinic. And I remember thinking, like, you know, that was a really lucky diagnosis of cancer, because at least there's something you can do.
Austin has Duchenne muscular dystrophy, a rare genetic condition that causes the muscles to decline over time. Kids usually lose the ability to walk by their teens and often don't live to their 30th birthdays. Austin, now 16, gets around in a power wheelchair. His younger brother Max was diagnosed with Duchenne as well. At 13, Max is still walking, a fact Jen credits to an experimental drug called eteplirsen.
Max was the first guy in this trial. You know, he's sort of a little medical miracle, and he might be the first of this generation to beat this disease.
Eteplirsen is made by Boston area biotech company Sarepta. It was initially tested in just 12 patients. A similar drug called drisapersen from California competitor BioMarin has been tested in more. But after promising early results, it failed to show improvements in a large late-stage study. Both are now approaching review by advisors to the FDA. BioMarin later this month and Sarepta early next year, after a long road filled with setbacks that threatened to derail both programs.
The slow process is the FDA wanting to do right by the patient advocates and providing a drug that has the promise of a clinical benefit with minimal safety risks. But, I think they're very much keeping in mind at the same point, they are the gatekeepers of drugs. They are not meant to just approve snake oil. So they want to be sure that they're not approving drugs that clearly don't have an effect or have a very high chance of failing in a confirmatory study.
The drugs work in a very similar way, using a technology called exon skipping. It's a way of circumventing the genetic blip that causes the body not to produce a crucial protein called dystrophin.
And in a disease as severe as Duchenne, with no effective treatments available, you may wonder why there could be any doubt these drugs get approved. Robert W. Baird analyst Brian Scorney says it comes down to evidence.
In contrast to what we're normally used to seeing in an approved drug, they're pretty thin numbers.
As for Jen McNary's older son, Austin, he's since started taking eteplirsen as well, as part of a larger set of studies conducted by Sarepta. And Jen says she started to see improvements in his abilities, but accepts there are still unknowns about the drug.
We're going to have those answers in 5-10 years. Whether it's really effective or whether it's just sort of effective, whether it's effective in only 10 kids or whether it's effective in the whole population. So the answers will happen. I think the risk is not approving it and having kids decline and finding out 5 years from now that the drug was as good as we thought it was and kids died while they were waiting for it.
Thank you.
For Nightly Business Report, I'm Meg Terrell.
And to recap our top and still developing story, Paris came under siege tonight. There were multiple attacks involving gunfire and explosions, with dozens reported dead and scores injured. France's military is being deployed throughout the city, and the French president says the country's borders will be closed. The equity futures market coming under pressure because of the events, pointing to a potentially volatile day when the markets reopen on Monday. And that is a very busy Nightly Business Report for tonight. I'm Tyler Mathisen. Thanks for watching. We'll see you Monday.